It's great to have you two with me. Andrew, my old boss, of course, and Vance and I, who have known each other about 6 months or a year now, something like
I
that.
think it's been a year probably. Yeah.
Well, I mean, there's been a lot of confusion, and every few months we get some calls of manipulation about the VIX and expiration, and a lot of people have been asking me to just kind of talk about it a little bit. So I figured I would bring on some experts about it, so we could just kind of discuss the latest. As far as the latest, we had a few months ago we had a whistleblower talk about problems with manipulation, but most recently was last expiration, which was almost exactly a month ago, since expiration is tomorrow
Hmm.
morning. And let's just discuss kind of what happened last expiration as much as we know. For what I understand, the VIX moved up in the last half an hour. There was an order imbalance of 114,000 contracts to buy in the SPX, and one of the big options that was bought was about a 50% out of the money put in the SPX. And there were a bunch of news stories. I was just reading a Financial Times one yesterday that were just kind of saying that that was fishy and that there wasn't too much comment from the CBOE. Can you enlighten me any further on that? I guess Andrew first.
Well, I mean, you've been trading a long time, Dave, right? So my first thought is, what I was taught as a young trader is, why does anybody do anything, right? Why does anybody buy 50% out of the money puts, and they pay up for them? So, you know, my spidey sense would say that there had to be a reason. Now, I can't speculate as to the exact reason, um, but there was an output from that somewhere, right? What happened after they bought all those puts? And there's, I know I've seen a lot of good writing. Actually, Vance put out some good articles about this, but so normally when I see anything that I don't usually get, my first response is, how does somebody make money doing that? And the only other thing I could think of after that is what the open interest count is and what kind of position they would have had to put in around the VIX to actually make money by bidding, by bidding those calls up. So the question really is on that as a trade. So you know that the puts went up. If the puts go up, VIX goes up, which means somebody had to be very selective buying some calls that could make enough money to pay for it. And I think that is just some arithmetic that somebody do. Maybe Vance has already done it actually, but I think, or the CBOE certainly, you would think they could come up with that kind of arithmetic because it sounds like somebody already did.
Hmm.
That's, again, just straight observation.
Yeah. What do you think, Vance?
Well, I think one of the things that surprised me was that the CBOE put out a press release after it. So I think that was unprecedented in my memory. I don't know if that's just because they feel like they have increased in exposure, but the fact that they did comment on that, I thought was pretty significant. That they felt that that it was extraordinary. I think for me the key issue was this part of what they call an overall strategy order, where someone was essentially putting in a hedge of SPX options against, let's say, a VIX future position. So it would have been a huge position for that many contracts. But I think if you look back over time, you do see vol spikes in the SPX options at settlement. So the effect of this auction is substantial, and just this one was extraordinary. Just the notional value of that, I don't remember what it was, but it was huge. The amount of dollars we were talking, especially if that was a strategy order, because that would have stretched across all the out of the money strikes, or all the ones that were counted.
Well, I mean, Andrew, you and I know that people would buy, for example, some puts that most people would look at if they looked at the screen would be worthless. But for somebody who was maybe short straddle at the money straddles or something, or some other much fatter puts, buying a put to protect your wings might make perfect sense to that person, or to decrease capital exposure. But obviously they did it at the exact time of the VIX. But yeah, there would have to be like some sort of strategy of manipulation where you're paying out X amount. For example, just to throw a number out there, you're buying 200 grand worth of puts so that you can move the market to make 2 million on the other side somewhere. And we'll never really know what the other side was, I don't think, unless the CBOE would give us some more information.
Well, I mean, the CBOE has a pretty, let's call it, robust compliance area where they know who does everything. And I think if you saw it happen again, that would definitely, I can't say definitely, but it seems like it would trigger something. I'm still trying to figure out how you could spend that much money on puts, but the reality is you had to have a really great call buy, because you need, what did they get, $1 or something? That jump in VIX was about $1 and change or something like that. It was pretty substantial. You're talking, you have to buy some, if you leverage it, even 7-to-1 or 8-to-1 to make that kind of money. You had to have the ability to buy a lot of cheap calls. And I think that, as I could probably go back. Of course, I didn't do that before we talked, but just looking at open interest the day before, seeing if there was heavy action week prior to on a strike that could have a ton of gamma, right there. I mean, I think we could really, if we really sat down and did the arithmetic, figure out what that would create. Because it sounds like those professors or the academics that did the paper, well, they created what looked like a trading, like an arbitrage possibility. So I'm sure that we're not the only ones we're talking about it, but some guys that are a little more serious are looking at it, and now the CBOE's looking at it. It would not surprise me if it didn't happen again. Maybe somebody got a polite note that, congratulations, you figured something out, but we really would appreciate if you didn't do that again. Because right now, I would say it doesn't appear to be an illegal strategy. I mean, you buy puts and you take your market risk. You never know how things exactly are going to open the next day on settlement. Since usually bad news would be good for that position either way. Normally, it's not like we gap really high on the VIX. It's hard for it to really print low like that. So I think the strategy lends itself to bad news being good news. But also I would say real simply, if you're a retail trader and you're worried about settlement, just don't trade the settlement. I think that's what we tell our clients. It's not a real long-term money-making game. If you have some residual contracts that are already worthless, so keep them on and see if you score something out of them. But, trading the settlement, thinking what's going to happen, clearly, you don't. If you think you do, you don't.
Yeah, and that's a good point that you bring up, that this doesn't really affect most of the people that are trading like a TVIX or a VXX or a UVXY, because the futures that are involved in those are basically moot at that point. That front month future is pretty much rolled off as they've rolled into the next month. By that time, it's completely gone.
Completely off. Right. Yeah. The night before they're out of that month.
And the future is going to absorb that short move anyway, really, because the future traders are not going to bid the future up $2. It's going to absorb that first VIX move, and then everybody waits 2 minutes. Oh, VIX comes back down, and there was no. So it's a very, unless you can really laser that VIX call strike to create the leverage, and I think buy some really inexpensive calls. That's the only way I could really see it happening. As far as some big complicated strategy, it seems like a pretty easy strategy. You buy puts and you try to make the VIX calls go up. I don't know what else you could be doing with that.
Right, and like you said, it's open to market risk. So the guys could have gotten run over. So it's not necessarily legal. I'm sorry to cut you off, Vance. Go ahead.
No, that's right. No problem. So I just thought it might be good to give some overall background for this process for people that aren't familiar with it. Great. So the way this works is that now it's every week, typically on Monday morning, the CBOE runs an auction. And they call this the HOSS, HOSS is kind of the software, the process that runs this option. And this auction rather. And there's really two pieces to it, and I think this is one area that there's confusion. There is the auction itself, and that's where it's literally trying to match up buy and sell orders, and so this auction, it's not at a fixed time because they have to get an order balance before they can finally trigger this option. So there are orders going in pre-market. CBOE, if there's an imbalance, they'll be sending out imbalance, and they'll say, we got a strike where we have this many contracts on the buy side, we need sell side, or vice versa. So there's kind of a lead up to that auction, and when they finally get it balanced, and sometimes if the market is in turmoil, this can take 45 minutes later than normal. So normally it runs, I think, about 15 minutes after open. I think that's typically when you see this option trigger. It might even be right at open. So when they get this all balanced up, they then trigger the auction, and they do all these sales for all these strikes. So you're talking about hundreds of potential different strikes all being transacted to actually trade these orders. And typically this takes a minute. They randomly select the strikes that get sold. So that's the auction itself. And you think about that as like, okay, you have all these trades. You could compute a VIX calculation off of that. And actually you do, but but it's not important. The significant thing about it is normally the VIX is trading mid-price. So if you look at the VIX calculation, they're not using traded values, during the day. They're using the mid-price between bid and ask. But then you have this auction, and then you actually have prices. You have transactional. So you have the auction, and then right after that, and this is something a lot of people don't know, is the price isn't set off the auction price. It's set the instant after that. And there are some things that can change between that auction price and then what they call the SOQ, the special opening quotation. And that's what ends up being the VRO. And that's what the futures and the options settle to. So the options and futures don't settle to the auction price. They settle to this next price that's calculated right after the auction.
So what if there is no activity in a specific strike? Do they pick some sort of midpoint to market at?
That's the special opening quotation. If they've either gone through if there's no bid or ask left, there, it's complicated. I don't completely understand all the algorithm. I was close at one point, but about a year and a half ago, but I've lost it. So I'm having to kind of rejigger back into that. But there are situations where you'll have a strike that's still valid for the calculation, but they're not using a traded price. They're using a mid price. But I would say 90%, 98%, high probability they're using traded values for the SIQ, but there are special cases where they use the mid price.
Yeah, it does sound complicated. I mean, what everybody wants is, retail to feel comfortable that this isn't a rigged game and that they can participate and understand what's going on. And it sounds like it's almost unnecessarily confusing the way they do this expiration. And I don't know how they got to this point where they do it this way, but well,
I think the background is that they created this auction. I think is actually what enabled the VIX futures to work, because they had taken a previous shot at a VIX calculation. It was essentially at the money options, but the only way to hedge it was dynamically hedged options, and it was just not economic for the market makers to do that. So when they rejiggered the VIX using this complicated this what they call a log contract variance swap is effectively what it is. So it adds a lot of complexity, but I think it initially was what people were using to hedge their positions, and what made the VIX futures actually start working.
That makes sense. I know that we are on a busy day today, and I know Andrew, you got to get back to it in a little bit.
Oh,
But
all right.
let's talk just for a
I'm
second.
just listening to Vance.
Yeah, it's very interesting.
The funny thing is like the whole thing. I just avoid the settlement because of the complexity, but
Yeah.
but it also sounds, even from what Vance says. I mean, you actually have to do some work to try to move things around, because I think by putting a lot of pieces in there, trying to, it's not like they didn't try to make it tough for people to, game or move the index around, right? Ultimately, if something settles, there's always potential, it sounds like. If somebody really wants to try hard enough to do it. And I don't think but there's still, like Du said, there is market risk, but it doesn't sound like it's a trivial exercise either.
Yeah, it's go ahead.
So I just wanted to mention, I was at the risk management conference CBOE puts on in 2014, and they ran a session, and basically they were saying, hey, we want more people to participate in this settlement process. So they were seeing strains and problems with this, and I think the delayed opening, they definitely did not like the fact that this was an uncertainty. They had these order imbalances. So they've seen this as a problem for a long time, and they're iterating on it, but still a problem. And I think fundamentally one of the problems you have is if someone's wants to buy a bunch of these puts, a retail person, you might say, well, $5 for a 1200 strike SPX option. What's the odds of that actually going into the money are pretty slim. But on the other hand, your margin requirements are huge. So a retail person is basically locked out of that trade. So CBOE was trying to drum up business for people that would take the other side of the trade, but it's not a real attractive situation.
Well, like I was saying before, if you can turn a short put into a short put spread with limiting your risk by a lot, even though it's very unlikely you're going to get to that strike, you can often free up capital. And it's possible that somebody was doing that. I mean, I don't even know for sure whether this trade was opening or closing on some of these trades, which should be public information. I should have researched ahead of time for this. But as you know, you and I know, Andrew, 90% of these calls of manipulation just aren't true when we hear it in the market. We hear it all the time on StockTwits or otherwise. Someone says, oh, they're manipulating it. And it happens a lot with the VIX because people don't understand the term structure. And they'll see, for example, this Monday, they'll see the VIX up 20 cents and the futures down and UVXY or TVIX down. And they'll say manipulation because they don't understand that these are ETPs are based on the futures instead of the VIX, and they don't understand the term structure sort of moving around within itself.
Right.
So, and I don't want to get into Alex Jones' world with calling everything a manipulation and gay frogs and all that, because that doesn't help people's confidence in the market when you just call everything manipulation. In my point of view, if people could manipulate things, they would, and there's some small pockets from time to time where there's not a lot of liquidity, where you could actually push something around a little bit, but that incurs market risk, and you can get run over on that. And if you're willing to place a huge bet and put millions of dollars at stake to try to push the market, you're almost, it's a risk reward thing. You're almost due the reward if it actually works one time out of 10, because you're placing yourself at risk there. But I don't really just buy it that people are just, that there's the upstairs guys are all getting together to, we're all going to move it and we're all going to profit, and it's that easy, and that the CBOE can't see that and everybody's covering for each other, because that just doesn't make sense to me.
Right. Well, I mean, today would be a perfect day for a VIX day, because you've got, at least when I last looked, right, you have VIX cash up, right, which is going to push the cost of any short-term or really narrowly focused calls. Let's say they want to buy the 14s or the 15s, right, something close. You have the hard move up today, so you've got to see where that settles. You've got to buy them, and then you got to try to buy, if you can, right, buy whatever SPX put you need. But you also had, depending on where, VIX actually lands, it seems like there has to be an ideal, it's almost like you need an ideal day before where VIX is very soft, so you get the extra pop where it's pulled back enough where the calls are cheap enough before they could launch up, right? Because now you have to be paying up for them. I mean, when do you actually start buying them? Anyway, just for fun, I'm going to look at volume and see, you might as well, right? Let's see if they do it again, because I have a feeling you'll get another announcement from the CBOE on it. But you could bet they're looking at it now. They might not say much, but I'm confident they're looking.
Well, if enough light is shined on it, then all of a sudden they're looking at it and they're talking about it, which is probably what happened last time, Vance, as far as them making a statement. There was so much pushback from, I think even the Wall Street Journal did something on it, but most of those articles seem to kind of misunderstand the whole situation in that they're not actually providing a scenario of how someone would actually go to manipulate. They're just saying someone bought something and the market moved. That's not manipulation in itself.
Right. Well, and I did take a look at the academic paper that's referenced fairly often. Two professors came out with kind of is the settlement being manipulated? And at first level, they're saying, oh, wow, we noticed this big spike of SPX option volume at settlement. And to me, it looks like they're missing that there's this auction happening because that's the auction itself. You see that reflected in the volume. So I think there really is some question about the whole validity of that. Do they even understand the basic underlying process?
Well, while I have you fellas here, if I could just ask you about what you think about the VIX. I mean, a month ago we had people saying, as they often say in the markets, we're in a new normal. We might be in backwardation as a normal thing moving forward. We might have a flat term structure from now on. Maybe 2017 was a total anomaly. We'll never see VIX below 15 again. And all of a sudden, we've had a pretty amazing crush. I mean, we got down to almost 12, or at least mid-13s. Right now, we're up a point and a half, 14. But if you told me a month ago we were going to be at 14, I probably wouldn't have believed it. And we've seen contango up to 8%. Now, albeit that's just kind of, to me, expiration week stuff. I would look to say maybe 5% average right now, but even that a month ago would have seemed almost inconceivable. So are we back to a 2017 scenario, or is this just a little depression?
Go ahead, Vance, you can start.
Well, my general observation, it seems like people don't have memories longer than about 3 months. I think that anytime you have this sort of a question, you should pull up a 10-year graph of the VIX, and one of the characteristics of the VIX is when it does collapse, it collapses dramatically. It just doesn't drop to the mean. It drops below the mean. So I think anybody that says that to me just is very short-term oriented and don't have not looked at the past.
Or have not absorbed getting sold premium for 3 straight weeks. I mean, one thing we teach in our classes, you have to put yourself in the liquidity provider's shoes, right? Why is the VIX going down? Because somebody is selling a buttload of out of the money puts in the SPX because we're not crashing anymore. So if funds want to generate dollars, they're going to go to where the money is, and the money is 200 handle out of the money put where they could sell put spreads and sell thousands of them. And anybody that's traded in the SPX knows how long do you want to stand in the way of that, all that put selling. That's going to drag the vol down. It's going to drag it down fast. So, last year I think was an anomaly just because we stayed low for so long. I remember very low vol before, viscerally low vol. Had it again, and I'm sure we'll see it again. But I mean, I think now at this point, it's business as usual. Wherever the market's got to move, and the vol goes with it. It's not just that. I think everybody, like Vance said, is so used to seeing a trade do so well for so long. But you can see that in almost any asset class at any particular time as well. It's just it just so happened that the vol ETPs had a crazy year in 2017. I mean, it wasn't unlike Bitcoin, right? You're looking at SVXY and XIV when they were alive, they went straight up. I mean, and then all of a sudden they stopped. Oh my gosh, what a shock, you know? So, but I'm sure vol will become normal once people, you know, stop selling it. It will stop going down. And it looks like the number we've hit was about 12.75 for right now on the VIX.
Well, I mean, obviously, realized volatility in the XPX has gone down. We're not seeing those 1%, 2% moves every day now.
Yep.
And in my mind, when I think about it in Volcomine, I think of people that are long premium in whatever, and it's just not moving around as much anymore. And they're kind of like, I don't know if I want to stay along this stuff. And that contributes to the collapse of things a little bit as well. So the other question I have for you is, did that Volmageddon, has that fundamentally or structurally changed our environment now? I mean, I know we've lost XIV, we've maybe lost some liquidity providers who've blown out and whatnot, but is the term structure and the environment of VIX ETPs, has it been altered like permanently by the Volmageddon? Would you say, Vance?
Well, I would say just the amount of assets under management that got evaporated on the short side. I think the overall number of futures trading, the open interest has dropped. I haven't looked at that recently, but you know, you blow up that much AUM, it is going to have an impact on how many contracts are trading hands. So I think there was you know, billions of dollars that got vaporized there that did show up in the VIX futures. But you know, to me, just the big thing about the collapse was the liquidity hole that showed up when all these buyers showed up at the end of the day to buy either to cover their short position or rebalance the 2x. The market just couldn't handle it. So I think that the demands on the market have really dropped off dramatically, and I think it's behaving normal at this point and less stress. Although I did notice that TVIX is starting to trade at a significant premium again, and also the exchange for physical on the futures is high. So that's kind of tweaky. That's not business as usual. So I think there still might be some after effects there.
I think I remember too a TVIX collapse. Remember when they kept what was it, 3 years ago or 4 years ago?
Credit Suisse, yeah.
Over the value. So I just would tell her that's like the worst product. Just stay away from it. It's a very, it's not predictably crappy. It is. I think the biggest damage from the volpocalypse stuff is, you know, they changed the underlying indexes for SVXY and UVXY. I mean, when you just the last thing I could think of actually that, although it was more damaging, is when in 2008 you couldn't short bank stocks anymore. You know, when you just change the rules, I think that's pretty destabilizing. Doesn't do any good. Doesn't do anybody any good. So, you know, I think that's part of it. But as far as, I mean, the vol markets will recover. There will be a new XIV. There will be another short vol product soon enough, because as soon as the contango builds again and everybody gets confidence again, they're going to launch another one. Maybe they do something with an embedded call in it. I can see that could be kind of a clever product if somebody's really smart, where you buy XIV and then you buy a percentage of the AUM by VXX calls, so it keeps it from getting totally blown out of the water. It's what I used to tell clients to do anyway that wanted to buy XIV. I go, just you know, try to weight it by buying a bunch of VXX calls, so if it goes to zero, you're not totally exposed. So you could do that on a bounce. I always thought that was a bounce trade. It wasn't a ride to the moon trade, so to speak. It was after already vol kind of collapsed. But
well, you kind of called this. You kind of called the Volmageddon, Andrew, and we're sort of warning people ahead of time, which is awesome. And I just want to plug your newsletter and your group for a second here, because you were able to switch gears pretty quickly and get on top of that. And a lot of people actually have been successful the last month or two getting along even these ETPs when the term structure was either flat or in backwardation, and you didn't have to pay a penalty for getting long these things, and they would just buy up a little TVIX or VXX, hang out, wait for that next tweet or that next whatever, and make a nice profit. And they were able to do it. Some people were able to do that over and over again. So all of a sudden, these like long vol guys who had gotten punished for years, all of a sudden were able to get in and out of trades, go trade back and forth, and it was a good easy trade if you're able to switch gears and start to take that long side and take advantage of it while it was in backwardation. And I certainly wasn't able to switch gears as quickly as you were, but some people were, but I have been cautioning people now that the term structure is back kind of steep. Well, I don't know what today it's kind of reversed itself a little bit. But
now it's fun to trade.
Yeah.
Because now the term structure is flatter again, and I think that's creates the more explosive trade in both directions. So that's when I get back to my screen. I'm going to look at it because I always wait till things get out of balance. That's when they're most fun. I think the retail concept is like I'm just going to put this trade on and it's going to just keep working all year long. That's a hard way to trade options, I think. Some things you can, but the vol products are kind of hard like that because I know Vance just said, I mean, if your time horizon is only the last 3 months, right, you're loading up on UVXY or TVIX waiting for it to go up again. And, you've had a sad, April's been a sad, or May's been a sad month for you owning that stuff. Mm-hmm. So I think people have to, they have to also understand the product. I think if anything, the volpocalypse sort of told people is you have to understand the product you're trading. And that's why we limit ourselves to just a couple of them. We're confident as we can be on how they act, but you plan for what you think is going to happen and you hedge for what you don't think will happen. Right. So teaching people how to structure like that will help them instead of just kind of going all in one direction, which can be tough.
Yeah, is SVXY toast now, Vance? I mean, now that it's been it's gotten chopped in half. I mean, it's 0.5 times. It seems just like a waste of capital to get long that. If you want to get long, or if you want to get short volatility, it seems like there must be a better way than 0.5 times the futures.
No, in terms of the inverse products, it's about the same. ZIV has about the same sort of characteristic, and also the VMIN. So they're all kind of stuck at this 0.5. But you still have 1.5% daily moves. So it's not like what we're used to, and it still has the same basic fuel of the contango. So I think people, I miss it too, but it doesn't have the juice. But certainly, if you have the capital to lever up, it's still there, and you do have a significantly lower risk of getting clobbered again. It's just not going to move like the 1X products were able to.
I'm curious for both of you. What has volume been like to your websites now? Is this a time when the retail is is it coming back, or is it slow? Or because I know, Vance, I remember you telling me right when that volpocalypse happened that you had 25,000 unique viewers in 10 minutes or something like that.
Well, it's I had a 30K day. Normally in that time frame I'd run about 2,000, so it was a 15x volume spike. But it's dropped off since. So I think that a lot of people got burned, and I think that when the short vol trade stopped working, a lot of people lost interest.
We seem to have a lot of refugees, like risk management refugees, because that's what we do. We just teach people to trade in position on risk based. Of course, we want to find the edge too. That's first, but then risk management second. So we tend to get a stream of people. It really hasn't changed a whole lot. Maybe because our website's so confusing about what we do, but in general, it's been, I would say, just steady for us. And we just every year it kind of grows a little bit.
Because I've noticed, at least on the Facebook group, I administer that VIX one, but I also am part of a bigger one with options that things have perked up lately, I guess, just with the short vol trade sort of coming back a little bit. There's been renewed interest from people, but there's definitely there's two ways, and there's still a lot of confusion over the term structure and all how it works. So we definitely have our work cut out for us in that regard. And obviously options trading in general. But anyways, I don't know if we provide any more clarity to people on this subject or not, but I think that it's very interesting what you had to say about the settlement. So I guess we'll have to wait and see tomorrow what happens.
Yeah. Now I'm going to look. I'm just going to look and see if there's any more action in that. What I would think a strike that would be enough to move the needle. And I guarantee that the CBOE doesn't not watch their stuff. They've got a lot of resources to keep an eye on it. So,
what about that new VIX product they have? It's like a farther out one. Instead of 30 days, it's like a year out. Has that gotten any traction yet, or has that been released yet?
It's running. You can certainly the ticker is available. The VIX 1Y, I think, is the ticker on it.
I haven't looked yet, mostly because I don't change my universe very much. When they list a new product, I'll watch it trade for 3 months, 6 months. So, because I feel like I should know something about it. So I haven't really seen it, to be honest. So.
Yeah. So what I've seen, Dave, is some people that are building signals. Some of them will go out further, like the VIX 6 MT, I think it is a 6 months. So, and actually, I've seen some good work there. So they're looking at pretty subtle changes in the term structure way out there. Plus, I think it's also complementary with the futures, is that you can put together a VIX term structure that's complementary to the VIX future term structure. So I think it's interesting. I was glad to see it. The other observation is they changed the name of the 3 month guy from VXV to the VIX 3M. And CBOE doesn't do things like that at random. I don't think they woke up in the morning and says, "Oh, let's change the name of an indicator." So I think there's some thoughts about doing futures on the 3 month VIX indicator. I wouldn't be surprised to see that.
Well, I tried to get Russell to come on here, but he's in Hong Kong doing CBOE business, which must be nice.
Yeah.
But I have no intention of I'm a CBOE supporter and booster, just like Andrew is. I'm not here to trash the CBOE. I think they do a great job, and they've done. The VIX has been a huge success for them, and whether Bitcoin will do the same still remains to be seen. But I just wanted to kind of clarify for people kind of what's happening. So we'll watch it again tomorrow. Like I said, it doesn't affect. If you're confused by it, which there is a lot of confusion, don't trade it. And I don't think that many people are trading the futures on expiration. And it doesn't affect the ETPs that most of us are trading anyway, because the future's over by that time. So don't worry too much about it. Would you agree?
I agree.
Yes.
Yeah. All right. Well, thanks so much, fellas, for coming on. I really appreciate it. I know it's a busy day in the markets, but it's always interesting to hear from you, and great to have you.
All right. Thanks, Dave.
Dave.
All right. Thanks a lot. Thanks, folks, and we will see you next time.